Hello? Oh, there we go. Welcome. Thank you so much for sticking around. And now we're going to be talking about how investors view the region from the perspective of financial innovation. And to discuss that very important topic with me, I would like to invite to the stage Manuel Silva Martínez, who's a general partner at Mouro Capital, Ali Abussaud, who's a founding managing partner at HALA VC, and Mohamed Fairooz, who's the Middle East lead for Standard Chartered Ventures. Gentlemen, I think I would like to start maybe with a sort of question about how how investors view the region has changed over the course of the past year. And I'll start with a personal anecdote for both me and Manuel, because we were on the same flight. We were flying from London, and after circling over the Black Sea unexpectedly for about an hour, we were diverted to Istanbul last night. We didn't know whether we were actually going to make it to Bahrain. We did, happily. We're both here on the panel. But that does signify that something is amiss, that there is a certain uncertainty, and it has been injected into a region which, until about a year ago, was an oasis of stability in a world that was increasingly on fire. So I would like to ask maybe the panelists to begin with, starting with you, Manuel, since you and I shared that predicament last night. How has, if at all, the sentiment about the region, which 2-3 years ago, CEOs, investors, consultants were more excited about this part of the world than anywhere else? You would ask them, they would say unprompted, the Middle East, the Gulf is the place to be. Has that changed over the course of the past year?
I think that's a great and obviously very timely question. I don't think it has changed. I mean, if you ask me, the venture capitalist, ultimately we invest in the long term, right? And what gets me excited is the long-term prospects for the region. It's, better regulation, it's economic growth, it's talent. All those things haven't really changed, right? Obviously there's some turmoil in the region, but, there's also elections in the US. I was in Mexico last week with a change of government that has thrown the country into the air. Austrian elections last week. So, where is there not something happening these days, right?
Yeah.
Yeah, so absolutely. So we have seen so many changes in the past few years. Yes, investors, they've been interested in the GCC, let's say in particular, since ever, let's say 2018, 2019. Since then, we have seen a clear increase in the appetite, regardless of whatever is going on the side of those countries, But I just came from Singapore, and I was in meetings with so many South Asian investors and some also European and American investors. So many of them, they either started to already have the mandate to invest in the region, or they are still trying to figure out a way to invest in the region. So I hope this answered the question.
So, Mohamed, I would like to ask you sort of a question which is related, but maybe slightly different. Is the sort of investment that venture capitalists are looking for in this region, has that changed over the course of the past couple of years? Fintech finance, like a lot of other startup finance, has slowed. There's an awful lot of excitement about AI. That's the only one, generative AI specifically, and chip making and hardware, which is basically the only area where you have big growth in investment and interest. But when it comes to financial innovation, is the sort of investment that investors are seeking, has that changed, both in the sort of product and service that the startup may be offering, but also, clearer path to profitability, clear path to revenue generation? How do you see the targets today versus targets 2, 3, 4 years ago?
Indeed. So, in our point of view, there has been an extreme and significant change in terms of investment opportunities and the investment cycles, I would call them. So, to give you a broad example here, we as SC Ventures, we've been focusing a lot on Asia in the past. We've shifted that focus into the Middle East recently, despite the current environment, despite the change in landscape, and the ultimate reason for that is the opportunity. Right? So the way how we looked at it, that the opportunity is still huge here. The investment landscape is more focused on certain segments, on certain opportunities. And one of the live examples to share with the audience here is digital assets or virtual assets, cryptos and others. We've recently established a digital asset fund, global fund here in this region. And the main drive behind that decision was the opportunity. The opportunity is huge. We've invested around $100 million with partnership with one of our partners from Japan. And, despite the change and the evolving situation here in this region, there are plenty of opportunities. There are untapped opportunities where I think, in my personal point of view, investors should be focusing on, should be tapping as we move on.
So what are these opportunities? Give us a little bit of a flavor of what are the things that you're most excited about at the moment when it comes to this region?
So I've mentioned our investments on digital assets, and the $100 million fund which we've recently established in this part of the world is one good example. However, as part of our startups and ventures, we've launched also one of our ventures called Zodia Markets. It's expanded its operation here in this part of the world. We have a Zodia Custody, which looks at the custody service of digital assets, making its way here to this part of the world. We have Libera, which is tokenization of sukuk, starting with some neighbor country, and the plan is to expand into the wider GCC region. So I think where we look at this region is there are certain specific segments where we can take the lead, where we can invest in, and in my point of view, I think in a short or medium-term basis, the return on investment would be extremely high.
Thank you. Ali, when investors are thinking about allocating capital to the region, and obviously yourselves included, what are the things that you are most worried about? Like, what are the biggest risks in your internal calculation? Is it the geopolitical stuff? Is it a regulation that is too onerous or maybe not onerous enough? Because that in financial services can also be a problem. Is it the sort of the state of the digital infrastructure that's necessary in order, the pipes basically that are necessary in order to carry these services? What are the things that you think that give you a little bit of pause when you're thinking about investing here?
I would say regulation is one of the things. Although in the past few years, so many countries, including Bahrain, Saudi Arabia, UAE, and others, they have already did lots of improvement that made it much easier. Like you see the ADGM or the IFC structures, which let's say solve the problem of being incorporated only in a few, like other places like Delaware, BVI, Cayman Island, but now you have the options to be in the region are regulated by the region. It's still yet to be happened in other countries like Saudi Arabia. This is why now for so many VC funds, they're still choosing to be Cayman structure or some other structures that it will, let's say, penetrate the risk of this kind of risk. So in VCs until now, ourselves, for example, we focus mostly, or we look at Cayman Island and consider Cayman Island structures. But when it comes for other asset classes like private equity, you could just easily be incorporated in Saudi Arabia, for example, and it wouldn't open up any issues like dealing with the English law or other kind of things.
How do you judge the state of the digital infrastructure in the region? I'm sure it's improved no end in the past few years. A lot of investment has gone in it. But is it widespread enough? Is it sort of solid enough in order to sustain the sort of services that the startups that you're backing are offering?
I would say yes and no. So yes, in particular because they have already, for example, we didn't have classes of shares, for example, this is just a small example. Now it is already there. They have come up also with the single person private equity companies, where whenever you have a holding company that is incorporated in Cayman Island and the operating company in Saudi Arabia, so that company will just own this company, and it works easily and smoothly. But the English law, for example, until now, it's not really solved. So I cannot really invest in a company where I have the holding company outside, and maybe also I have other LPs who are international, and they wouldn't be comfortable to go to a local court where there is no basis of taking decisions if they want to compare it with the English law. So this is one of the very sensitive area where I think is still not yet solved.
Right. Manuel, you invest all over the world. As you said, we're talking. You said that you spent some time in Mexico, around Latin America, obviously Europe. How does the opportunity set in this region differ to the opportunity sets in those other regions that you have an interest in? Like, what is it? What makes this, or which bits of the financial innovation space are the most exciting relative to other places?
Yeah, there's probably three things, right? I think the first one is that the region is still, as you were mentioning earlier, catching up, I would say, on what I would call the classic categories, right? Neobanks, neo-lenders, things like that. Like, if you look at the region 10 years ago, 5 years ago, there wasn't a lot going on, and now there's a lot going on, right? So from our perspective as global investors, it's really interesting and it's great to apply the learnings from having invested, let's say, in the US 15 years ago, in Europe 10 years ago, to analyzing business models in the region and saying, well, this looks like it could work, this looks like it couldn't work, or there's some local flavor that would benefit this kind of model versus this other one, right? So I think that is interesting, I would say, at the individual fund level, to be able to really transport those learnings on the part where the region is catching up. Then there's a second element which I think is also really interesting, which is that the region is still at the forefront of everything else, right? So the same way they're catching up on the old categories, we were talking about crypto assets. I mean, the local regulators are the most advanced. They're really trying to attract all that talent, and they're outpacing the speed of the US or Asia, for that matter, right? So, in the global investment scene, I would say, the opportunities we find here, because of that favorable environment, are just as good as what you can find in New York or in Switzerland.
Can you give me a little bit more of a sort of granular sense of the sort of, the local flavor, as you put it? So, what is particularly enticing here relative to other places?
One thing that certainly is attractive to me, and some may disagree, is the fact that the government and the regulators are very involved in shaping innovation. And so as a result of that, if you compare that, for example, to the US, well, ultimately, a lot of the initiatives are privately owned and privately driven. The fact that the regulators are so much on top of that helps you predict what are the good solutions and what are the standards that are going to be supported. So somehow, it gives you a little bit of a sense of direction, which you may not have elsewhere. But I think that, for example, is a great engine for innovation.
That's very interesting. And I have a sort of a related question, Ali, which I'll put to you, which is, the region as a whole is quite large, it's substantial. The individual countries in the region are not necessarily very large, or do not offer a huge market in and of themselves. Bahrain, beautiful place, really enjoyed the few hours that I've spent here so far, but not the world's biggest market, I think we can safely say. So the region as a whole presents a great opportunity, but especially in a highly regulated area like finance, sometimes companies find it difficult to cross borders. So Manuel was saying how governments are very supportive. Do they also talk to each other to make it possible for startups that you're backing to actually work across the region as opposed to just in individual countries?
So the answer is yes, they talk with each other, but that doesn't really mean that whenever you are regulated in one of the countries, it will be an easy and it will give you the green light to just easily go and grab the license in the other country. Still, this is one of, let's say, difficulties so many they face whenever they come here. Bahrain, for example, it's a great place to come and test the market, try to talk with regulators, and whenever you are comfortable, you did your MVP, then you basically try, you should just expand to other bigger markets like Saudi Arabia or UAE, or otherwise it wouldn't really make sense to you. And later on, you will have to go and speak just from, I wouldn't say from point to point necessarily, but it will make a difference because you already have a license in another market, but it wouldn't just make the prerequisite less. So the answer, this is still an issue between the countries.
That's interesting. Do you have any sense that this is improving, like that, that there is going to be more cooperation with the GCC, for example, in this particular area?
I believe that there's plenty of discussions between them, and yes, it makes a difference whenever you go, you speak to SAMA, the Central Bank of Saudi Arabia, and they know you are regulated in Bahrain. So the way they will treat you, it's different, but it doesn't mean, maybe it will cut down a little bit the time, but there is nothing that would say, for example, if you already have a license in certain category in the financial institutions, for example, it will enable you to, or make you eligible to get the license somewhere else. I believe it's still tough.
Right. Mohamed, I sort of have, a question related to the government's role in the sector, but more from the perspective of the sovereign as an investor. So clearly a lot of the countries in the region have very wealthy, well-endowed sovereign wealth funds. They're very keen to diversify away from their traditional source of wealth, which is hydrocarbons and petrochemicals. And they have an awful lot of money to throw around. And obviously some of that money is invested abroad, but some of it is invested domestically, in part in order to try and begin to transition these economies away from oil and gas. Do those sovereign wealth funds, are they crowding out, or do they risk crowding out private sector investors? Or are they actually crowding in private sector investors by sort of enabling the building of an ecosystem which suddenly becomes more self-sustaining? How do you see it?
So thank you very much for the question. First of all, the diversification point you've mentioned, focusing on other sources than oil and gas is something which I'm sure is a priority for most of the governments, most of the sovereign wealth funds. And based on our experience in the region, based on what we've seen, sovereign wealth funds in this region play a key role in balancing the investment. We've seen a systematic way of doing it in the kingdom here, in the wider region. We've seen sovereign wealth fund playing a key role in promoting certain segments. And based on our experience, we've seen a ripple effect on such investments. We've seen sovereign wealth fund, for example, supporting the SME segment, investing more on platform, tech, other related investment to support the SME. In fact, that has a bigger impact on the wider economy. Similarly, we've seen investments in banking as a service platform, digital assets. We've been seeing sovereign wealth fund and interested in investing in sovereign wealth and digital asset platforms. Tokenization, sustainability is the other one. So if you look at the vision of the governments in this part of the world, in this region, sustainability and financial inclusion is a key pillar of the vision. And we've seen through this, the sovereign wealth fund vehicle, there has been a huge focus, a huge diversity. Now, in a very short period of time, if you look at the GDP contribution of the kingdom here and even the wider region, you would see that had a bigger impact on the GDP. And even on a longer term basis, we would see the impact becoming even better and better in our point of view. Hence, as SC Ventures, the way how we set our strategy and vision is very much aligned with the government, because back to my earlier point, that's where we see the opportunity, that's where we see the investment, and that's where we co-invest with some of the sovereign wealth funds.
Ali, I would like to sort of put a related question to you. So when you see that an investment, a startup that you're eyeing is also getting interest from some sovereign wealth funds, are you likelier or less likely to get into that investment?
No, I mean, when we're talking about early stage kind of, let's say, startups, I will love it because it will give them, the additional capital, and you would know that if they really perform well, it wouldn't be an issue to go and raise additional or subsequent rounds. But I believe that this wouldn't really work always on late stage private equity deals, because in some private equity, when they are dominated, let's say, by a sovereign fund, and they have the majority and they have the biggest voting rights, in some of the cases, they will take decisions which tend to be best for them, not best necessarily for the other investors. So this is the kind of difference we see. So just to link what's been said by my colleague, Mohamed. So what we've seen, the sovereign investors, they've been investing either in funds in the region, or also they have co-investment right with the funds to invest on their, let's say, startups. This created, let's say, a better platform other than investing left and right in, let's say, competing entities.
That's really interesting. Manuel, I wanted to ask you about another source of competition for venture capital funds, and that is corporate VC. Mm-hmm. So you see a trend, certainly in America, where the large tech titans, the Googles, the Amazons, Metas, Apple to a lesser extent, but also a little bit, they are opening their wallets and investing in a lot of startups increasingly, and certainly in the area of AI. How do you see the role of corporate VCs in the region, specifically in the fintech space? And again, are they sort of crowding out other investors, or are they sort of are they enticing them in? Because that is also the tension. There's always the tension in when you have a big anchor style investor.
That's a great question, and actually, I'm not sure you know, but I do have a little bit of a corporate venture history of having built 2 corporate ventures for 2 Spanish banks. So I think ultimately, it's a matter of how you structure the partnership, right? And ultimately, when you invest in a company as an institutional VC, as a CVC, it's what you bring to the table, making sure that you bring no more but no less than the value that's expected from you, right? So you find some CVCs that are, let's say, overstepping into their role and trying to influence the companies maybe too much to their own agenda. That's bad. But generally speaking, having some corporate money around the table can be complementary to institutional VCs and actually quite useful in securing, let's say, an access to a client or an access to a certain type of expertise, talent, maybe a banking license, something like that, right? So if you structure the partnership well and you structure basically the contribution of each party to the success of the project, it's generally a positive thing.
That introduces a lot of new moving parts. I mean, obviously, investing in a startup is always risky. That's the whole point, right? But if you suddenly have to contend with a lot of other levers, mm-hmm. Does that, for instance, make these investments? Does it take longer to because these agreements or these arrangements, presumably they take a while to establish or to agree.
They do. I mean, yeah, I would say for starters, fintech is not a fast sector. If I look at my portfolio, our average holding period is somewhere between 8 and 11 years. So somehow, when you invest in a company, especially early stage, you're up for a ride in a way anyway. But I think that's where what you say is actually interesting. I think you need to differentiate the commercial aspect and the company building or the governance aspect to it. I don't necessarily think CVCs are often best suited to be the driving, let's say, board director at a board level, driving the strategy of the company, but it can be the best partner for that company to secure commercial revenue, right? And so the question for me is how do you combine those 2 sides of the table so that it benefits the company? So it's not necessarily slowing down the company or speeding it up. It's just making sure that everybody's kind of confined to where they should be adding value.
Mohamed, as a corporate VC, how do you see it?
So I mean, here maybe I want to bring up, the approach angle. I think it's very important to highlight that for the audience. To ensure that there are no emotions, there are no kind of, bias in terms of decision making. We as Standard Chartered Ventures, we have a systematic way of investing. We have something called a brain trust. We have something called an investment committee, and we have several layers of investment decision making. I think based on the experience, what we've seen that would independently look at each single investment opportunity. It also, some of these committees, it includes some of the independent members, right? So from academia, from even competitors, where we would love to get their views. In our view, that's more important than the final decision. It's the approach, it's the design of the process.
Well, unfortunately, we've run out of time. We certainly haven't run out of subjects to talk about. This was absolutely wonderful. Thank you so much. Let's give a warm round of applause to our panelists. Thank you so much. I think we have a celebratory victory photo.
Let's do that.